Okay, in this video, we're going to start learning about taxes. And as an introduction to taxes, we're going to get a basic understanding of uh, what the U.S. tax system is and um, why we pay taxes, and get a general idea of how many taxes we would have to pay in our situation. So most people don't like the word taxes. They think that it is a hindrance on their financial well-being. They feel that they are oftentimes cheated by the government when they are told how much in taxes they have to pay. And partly that's because it's their largest expense for most people. And the U.S. tax system is quite confusing for most people, mainly because they don't make the effort to learn about it, or they don't want to, and they just rely on someone else to do their taxes for them. So it's important that we learn about the tax system and how it works so that we can actually use it to our advantage. And there's are some important reasons why tax systems exist. For example, the United States and other countries as well. But here are some of the main reasons or goals for the U.S. tax system. One is to raise revenues so that the government can help provide for the citizens of the country. And an example of that is protecting the people. Uh, Imagine if every single person in the country had to hire a personal bodyguard because the country did not provide an army or a military to protect them. It would get quite expensive if we had to each individually provide for our own protection. So that's one reason why the tax system is there, is to help protect the citizens. Another reason is to control the distribution of wealth. And so what that really means is that the more wealthy households tend to become wealthier, and the less wealthy households tend to become less wealthy as time goes by. And so we see a larger gap in wealth among different households. So the tax system is set in place to help distribute the wealth more efficiently among different households so that there's not a major gap between the wealthy and the less wealthy, although there still is a gap that exists. Another reason why there's the tax system and a goal for it is to foster economic growth. The tax laws are written in a way to try and promote specific behavior for economic growth. For example, businesses. The tax laws are written in such a way to help promote business growth and help promote the starting of businesses so that the economy can flourish. Another reason or goal, the fifth one here, is protect social goals. What that really is pertaining to is the idea that some people need help. For example, there is the American Red Cross that helps those people that are damaged from a natural disaster. Or the church, for example, helps foster those who are in need. And so the tax system is written in such a way to help people that are in need receive that help. So it can promote those who are wealthy or may have an abundance of wealth. It can promote altruistic behaviors such as giving and being charitable. Now, the U.S. tax system is what we call a progressive tax system. Basically, what that means is that as one's income increases, the amount of taxes that they pay also increases, but it increases gradually at a different step by step. And we'll see a little bit later about how that works. But just understand that the U.S. tax system is a progressive tax system and not a regressive, nor is it a flat tax system. And that means that as your income goes up, the taxes that you pay goes up as well. So if I'm earning income, then how much in taxes do I actually have to pay if we're in a progressive tax system? Well, that really depends on a lot of different factors, and three key important factors, and this is not all of them, but one of them is the amount and type of income that you earn, and we'll get into the different types of income that you can earn. There's also an important factor of household size and type. We'll get into understanding how households that have more children, how does the tax system work around them versus a household who has no children, or maybe one or two children. Also, the type of household. For example, we might have a one-parent household or a two-parent household. We may have a widow, okay, or there might be people that are married but are separated. So there's different types of households and household sizes that determine and impact the amount of taxes you pay. Then another item is the assets and the liabilities that you have. So we know that those are identified on the balance sheet of our financials. And so as we look at the different assets that we get into, that we purchase, and the different liabilities or debts that we take on, those different pieces can impact the amount of taxes we pay as well. So what is the general formula? And for the sake of this video, we just want to get an idea of what the general formula is. We'll get into the more details of each of these line items, but the basic formula, and to some of you it may not seem basic looking at what this is, but this is the basic formula from a tax perspective of how to determine how much you have to pay in taxes. Basically, we start with our gross income, which is very commonly known as our salary or money we make from doing work. And then we subtract from that what we call above the line deductions. When we say quote unquote the line, we're talking about adjusted gross income. So we subtract out above the line deductions. That means deductions that we can subtract to get to our adjusted gross income. Then we go below the line and we subtract out our standard or itemized deductions. Standard and itemized are two separate types of deductions. It's not the same deduction with two different names. After we do the standard or itemized deductions, whichever we choose, then we take out our exemptions. And our exemptions depend a lot on the type of household that we have and our family size. When we subtract out the exemptions, we come to our taxable income. And we would then multiply that taxable income by a tax rate that is provided by the Internal Revenue Service. That will bring us to our gross tax liability, or in other words, the amount of taxes that we have to pay. But we're not done there. We actually get to deduct more items from there. One of them is tax credits, which are items that we can deduct from our tax liability dollar for dollar. And then we take out any tax withholdings that we may have already paid from our employer. So our employer, when they give us a paycheck, the first thing they do is they pay taxes to the government. And we get a paycheck that is net of that. And so those withholdings are referring to that. And that brings us to our total tax refund, or the amount of taxes that we have to pay. So we can get a tax refund if we have overpaid in taxes throughout the year, or we can have to pay taxes if we haven't paid enough. So where do we actually go to pay taxes? Well, taxes are generally due every April 15th of every year, depending on the day if it falls on a weekend or a holiday. There are two major places we can go to pay taxes. One, we can do it ourselves by going online and using a tax software or program such as H&R Block or TurboTax, which are two of the most common. Or we can do it by filling out the physical forms. And we'll get into the physical forms later on. But the physical forms are actually very important to understand because they help us see where we can plan our tax benefits. The second place to go is you can use a tax professional. Oftentimes, people will use a certified public accountant, a certified financial planner, or an enrolled agent. All three of those are people who have been certified to help in tax situations and file taxes. So, with that being said, that concludes the introduction to taxes, the basics of how the tax system is set up, the formula, and why we pay taxes.